and it came out and it was very bad for Australia. Okay, this is what I want to talk today with you guys. I want to talk about Australia, I want to talk about UK, and then I want to give my opinion based on the data that just came out from most probably the Central Bank of Australia that takes care of those numbers. We had employment change for January, and we had unemployment rate for January, and we have full employment change, but full employment change is not that important to the market. The market's much more looking at the employment change and the unemployment rate, that basically unemployment rate in a percentage, okay? And then it was 11:30 in the morning, and we have 6 o'clock tonight on Sydney time. We have GDP year over year, quarter over quarter, and month over month, the full set for UK. All right, so before we start, please give us a thumbs up on this video, subscribe to your channel, share this content with your friends, and remember, today's Thursday and we have the webinar, okay? It's the wrap-up day. Usually we do ones on Tuesdays as well. I'm seeing a lot of new people coming in, so that's very, very good. I appreciate all of new people coming in. That's very nice. Hope you guys are liking it. And today we're gonna have again 8 to 9 p.m. on Sydney time. So don't waste your time. Go to the ACY website, register there for free, and await you tonight. Okay, let's go to the economic calendar here pretty quick. 11:30 we did had the employment change, and it was very bad. It was very, very bad. I mean, very bad. The only thing that didn't, let's say, crash the Australian dollar was because they moved the previews to the up. And when they move previews to up, that sort of have a positive effect. How can I explain this? So let's say, okay, this one is for January, right? This data is for January. And we of course have the data for December as well, 2023 December. So let's say December came in at 1, just, easy numbers here, came in at 1. And now we are on January, and we're gonna have the release for January, and it come up at some number, but the previous was 1, remember, because December was 1. So what happened is they've revised the previous up or maybe down, just depends. In this case, they revised it up. So that means that it was better than it was full priced in already the last month of December than what the market was expecting. So if we look to this now, they revised it up from, I can't remember those numbers, but I think it was 70,000, if I'm not wrong, to 62. Remember, we want less, all right? Lower numbers are better on here. And that one was 62. The consensus for this one here for January was 26,400, so 26.4K. Well, my friends, we only had 500. We did had 500. We didn't even have 1,000. We had 500. Can you imagine? I'm laughing because this is very, very bad. I don't know if this is like a misunderstood of the economic calendar that I use here, but I'm looking to these numbers and I'm like, what just happened? Right? Because we were expecting 26,000 and we had 500. So I don't know what's happening here. I hope that this is wrong. I really hope that this is wrong. But anyways, it is what it is, and I don't even to tell you, right? This is really bad. Not even to have 1,000, we had 500. 500, this is not even, this is like 400, we had 26,000 of consensus. This is very bad. Wow. And then unemployment rate came 1 base point higher than expected, so this is pretty bad as well. So unemployment rate of January of December, of the previous one, was at 3.9%, okay? Then RBA came in and say, okay, we will have a little bit more of unemployment, and the consensus is that we're expecting, the market was expecting for January is at 4%. So that is 1.1% more than the previous, expecting 0.1% more than the previous. Well, it came up as more 0.2% of the previous and 0.1% of the consensus. So we did have a lot of unemployment rate, okay? That was pretty big, 4.1% unemployment. You know, it is a big number. Those numbers should be around 1.5%. So when you think about, okay, it's double, it's double. We see the number 4. When you think on a population size, this is a lot. So Australia population is there between 26 to 27 million people. When you think about that, this is a big number, all right? This is a big number, and it's kept rising, okay? So just think about that. Now, moving to the GDP of UK tonight, we're gonna have a 6 o'clock year over year, quarter over quarter, and month over month of December, right? Month over month, December. So let's just run out the numbers here. I will break that down more into my webinar tonight. So again, make sure to register. Free, no charges, $0. It's a good way for you to ask me questions. I will 100% answer your questions. I will be there. I will be present at the moment to you. All right. Okay. So GDP year over year, quarter 4. I've explained it year over year, quarter 4, what that means on Tuesday's webinar. So if you haven't been in that, you have the chance to go to the ACY YouTube channel and watch it. Okay, it's called a week ahead, macro week ahead, and it's recorded in there. GDP year over year, quarter 4, the consensus is at 0.1%, and the previous was 0.3%. So there's acceleration there. Okay. Same happens with quarter over quarter, quarter 4. No changes expected there. So the preview was negative 0.1, and the consensus is still negative 0.1. And the month over month is expected to decrease a lot. The previous was 0.3%, and now they're predicting a negative 0.2%. So that's pretty much 100% sort of pullback. Let's call it like this. All right. So if you want to know my opinion, if you want to know what I think about this, what's going to happen, it's pretty much simple, right? UK has a problem right now. High unemployment. People keep spending. So I guess that with high unemployment, low people working, yes, the GDP does have a probability of being negative, especially for quarter over quarter and month over month. Not too sure about year over year, okay, because in general, I do believe that they had a, well, not a good year, but, you know, let's call it a mild year, all right, that has a potential to bring it in a positive aspect, all right? So this is my take, and I still believe that the pound dollar can continue to go down and the US dollar can continue to go up. I just had my target reach on the 107 of euro dollar. I've mentioned this yesterday and I will mention again. All right. So if you look to my past record, you know, if you look to the last, probably I've done more than 100 videos already for you guys. In the end, in swing trading, I do get the things right. So it's simple. It's macroeconomics. All right. So this is all from me today. Unfortunately, well, hopefully, this actual of employment change in January, it's wrong. I'm really hoping for. All right. I want to know your comments. Put down below. What do you think about that? Do you think that Australia will get into recession? Do you think Australia will hike another 25 base points? What do you think will happen with Australia? Have a good trading day ahead, and I see you in the next video.